Welcome to Master Trader. I'm Dan Gibby, and in this weekly trade review, I'm going to show you two setups that we found last week where they were both very extended in different ways, and we shorted out of the money expensive put options, which we do as what we call for an income trade, where we're collecting the money using the charts, making a bet that the stock is not going to move to that strike price before expiration. Here's the first one. Daily chart of coup. Now this was in a nasty downtrend. Those were two ugly red bars, but if you were also to look at the weekly chart, it is down a lot. Down from $350 in less than a year. Now on earnings, it had a very, very ugly gap. So what we do is we put it in a 5-minute chart, thumbnail we call them, and we see what it does. And these vertical lines are pre-market, so here you see the huge gap. Look at this, it closed at 90 bucks, gapping down to 63 or whatever. And then, this is pre-market, it bounced, it went sideways, a couple red bars here, and then the first 5-minute bar is a wide range bar closing above this pre-market consolidation with very little tail. So that means buyers are aggressively stepping up at this price. We call this either a Master Trader gap and snap or an exhaustion gap, but we had a big void, it's down a lot, and it had bullish price action. So once it traded over the 5-minute bars high, we sent this trade alert out. Let's sell the naked $60 puts, which expire just in 3 days, and we're making the bet that as long as coup stays above the short $60 strike price in 3 days, then we collect the money. And we sold them for 80 cents a share, so if you sold a 10 lot, because one contract equals 100 shares, $800 is immediately being deposited into your account. Now, what do you get in exchange for that $800? Well, you're assuming an obligation to buy 1,000 shares of coup at the $60 strike price on or before expiration. But we use the charts to say, I don't think it's going there, and that's a bet I'm willing to take. So we do it all the time. We sell naked calls and puts. We sell the credit spreads, bear and bull, but always using the chart to make our decisions. Then we go through a checklist to make sure the spreads are tight, it's good premium, there's no pending news events, etc. We teach all that in our courses. There's another one, JD now. So this one, it didn't have an excessive gap down, but it's still a climactic buy setup. The sector, this is one of the Chinese stocks, the whole sector was getting decimated. You can look at KWEB, which is the Chinese ETF for these stocks. And so the sector actually was gapping down this day, and this one did just a little bit. So these have been on our watch list day by day to say, let the chart tell me when it feels like turning around. We look for what we call a potent reversal. So now here, this one gapped down, rally aggressively. That is a wide range expansion bar. Again, notice that there's no tail down here, which means the gap down was bought aggressively at $41 and change. So it closed bullish. You could have sold a put right over the 5-minute high. Instead, we watched it, a deep pullback, 180 reversal, bottoming tail. Now it's time to strike. Right where this arrow is here, that's when we sold the 3 days to expiration, $35 puts. I mean, do the math on that. At $43.50, it can go down to $35 at expiration in 3 days. And we sold these for 50 cents a share, so 500 bucks goes immediately into your account. Well, I did the math for you. It's 20% below the price when entered. And so that's another incredible short put income trade with the charts, climactic patterns, and the prices of these puts are already escalated through the high implied volatility because of the fear that's been created as shown in the charts in both of these. Hope that helps. Come check out a trial at mastertrader.com. See you in the next video.